This is going to be Chapter 2 of individual income tax. Unfortunately, due to some time and wellness constraints, no Game of Thrones or different themed presentation this time. So I don't know how much that helped before anyway, but at least it was more fun for me to put together. But anyway, this will be more straightforward, maybe a little shorter, a little bit more boring, so I apologize for that in advance. Okay, again, these are some introductory concepts related to tax. As reflected in the quiz grades from last week, you may have noticed a lower grade than you may have expected, and I do admit, and looking through the questions, that there was a lot more application of concepts than maybe I was expecting to be in the quiz. I feel like, we did go over the concepts, but there were some steps that you were required to do, like looking at the tax schedules and plugging things in that maybe you were not comfortable with. I think that will lessen as we go through the weeks because, the first 2 weeks are kind of introductory materials, and then we'll actually get into where the calculations take place more. So we'll be working through more of that in class and in lecture and in the problems. So maybe it won't come as much of a surprise. Either way, I feel like, at least looking at your book and going through the homework and such, you should have, and watching the lecture, enough resources to figure out the problems, since they are open book, open notes, and basically open anything other than asking someone else. So if you feel otherwise, I'm definitely open for discussion on the matter. If not, we will go with that understanding. I'm hoping also to post up an overview of going over some of the quiz problems from Chapter 1. Not everyone has taken the quiz yet, and since we are in the first 3-week window where I said deadlines wouldn't mean as much in the first 3 weeks, and then after that they're going to be pretty strict. So I'm still allowing people to take the quiz. That's why I've not posted that yet. But at some point I will post an explanation of the answers, so at least you can see what you missed there. So Chapter 2 is talking about tax compliance, the IRS, and other forms of tax authority. In the introductory materials, yes, we are going to look at some requirements for not only individuals, but also for corporations and estates and trusts. But obviously we will focus most of this semester on individual income tax. So just for overview purposes, all corporations have to file tax returns. Doesn't matter how much money they made or lost. Estates and trusts, actually we probably won't touch much on these in either portion of this class, Tax 1 or Tax 2. We may briefly touch on it in Tax 2, but there is the threshold requirement there of $600. And then for individuals, most importantly, whether or not you have to file is determined by filing status, age, and gross income. So you can see here that based on filing status and age, the gross income levels that you see in that second column right here go up and down based on what your status and age are. And here's how we got to this number right here. And these change every year because the standard deduction, personal exemption are typically going up little by little every year. Tax return due dates for individuals, April 15th, generally the day, because that's the 15th day of the 4th month. Following the end of the tax year, individuals are on a calendar year for tax purposes, so that comes out to April 15th. If it falls on a weekend or a federal holiday, well, in this case it wouldn't on a federal holiday, but if it falls on a weekend, then it is the next business day, so the Monday after that. So if the 15th is a Saturday, then the 17th would be the day taxes are due, or the 16th if the 15th falls on a Sunday. However, for non-calendar year taxpayers, which could happen to C Corps or partnerships and S Corps, if that 15th day of the fourth or third month falls on a Saturday, Sunday, or federal holiday, next business day for that as well. Automatic extensions are available for individuals, corporations, and partnerships. And basically, if you file for one, since it's automatic, you get it. So the only thing not automatic there is you still do have to file for it to get it. Yeah, these are just examples of non-individuals. So for a corporation, basically you're just, in that example, counting 4 months ahead, finding the 15th day of the month, and then if you have a 1 month extension, obviously that goes to, a 6 month extension, that goes 6 months out into the future. Statute of limitations is generally 3 years from the later of these two things. So either the date the tax return was actually filed or the tax return's original due date, whichever one of those is later. So if you file an extension and then later file your taxes, then obviously that would be the later of the two. If you file well before the April 15th deadline, you still have 3 years from the April 15th deadline to amend or change your tax return, okay? Or the IRS can assess a tax deficiency. Important to note here, though, that there is no statute of limitations on fraud. So if you fraudulently file your taxes, you are not safe 3 years down the road. The IRS can come get you anytime, ever in the future, so don't do that. Pretty self-explanatory on the statute. Obviously, a lot of people are concerned with getting dinged for an IRS audit. There are certain components of a tax return that have been found to be the most likely to have been used and abused as far as deductions go, that are more likely to trigger an audit. Tax returns go through these various computer programs like we're talking about here that check for these basically rank these returns in order of what should be audited, or what is the highest likelihood of having been done incorrectly. And obviously, they're not concerned with you having done incorrectly in their favor. They're concerned with you having done incorrectly in your favor or in your client's favor. So just know that a lot of people will never see an IRS audit. If you go through your whole life filing taxes as just an employee with no special circumstances, or let's say that you don't ever itemize your deductions, which if you don't know what that is, we'll talk about later, it's unlikely that you're going to get audited. But if some of these red flags are triggered based on how you've done your taxes, then your odds of getting audited are increased. And I know of numerous people that consistently get audited, if not every year, every other year. So there are some things that are basically huge red flags that doesn't mean that you're doing anything wrong, but if they are areas that are highly abused, then the IRS is likely or more likely to audit you. These are the various different types of audits that could occur from the IRS standpoint. Correspondence examination is just done by mail, maybe 1 or 2 items that are flagged on the return, and it's not really a big deal. IRS office audits, office examinations, they ask you to come into the office. It's going to be a little bit more broad in scope and maybe slightly more serious than a correspondence exam. And then finally, field examinations, least common, but could last a long time. This is where they're digging into pretty much all of your stuff. So field examinations are obviously the ones that cause the most fear for, in our case, as accounting professionals, for clients, or for us individually if we're the proprietors of the business, for a number of reasons. For one, obviously, if they're digging into all of your stuff, there's a much greater chance that they're going to find some issues. For any of you who decide that you're going to, kind of skate on some thin ice, or try to exploit some gray areas, obviously your heart rate and blood pressure are going to go up significantly if you find out you're going to have to do a field examination. Okay, so again, depending on what your status is, there's a chance that you'll never see any of these in your life. If you're a tax professional, you will deal with clients who get all of these types of audits. I'm not going to spend a ton of time on this. This is not, this is not really a legal class. We're not going to cover. We'll cover a lot of the process, but we're not going to go in depth into what the procedures are in terms of the court system, the appellate system. I'm just going to try to give you an overview of how all that stuff works. So you can just follow along on this flow chart here, get a decent idea of when you're dealing with the IRS, how the procedure works, and how you can eventually end up in tax court from there. Okay, there are various different levels of trial courts. You, as a tax related issue, could end up in any of these three courts: tax court, district court, or U.S. Court of Federal Claims. The biggest difference between these, I would say there's a couple differences. First, tax court is the only court that you don't have to pay whatever amount is in question before you go there. Any other court, basically, what happens, the IRS says you owe more money than you think, and there's some issue that is contested between you and the IRS, and you end up going to the court system to handle this dispute. Well, you're going to have to pay what the IRS says you owe in order to even have the district or Court of Federal Claims courts hear your case. Okay, that's the advantage to going to the tax court. For the district court, the only real advantage you have, well, you have two advantages, potential advantages, I should say. For district court, it's a local area, local court. So if in the local community or local area you think there's more of a chance that you'll find people who agree with your position, it's possible to have a jury trial there, and you may elect that court to bring your case in because of that. The tax court and the U.S. Court of Federal Claims are national courts, so you don't have to live within a certain district to bring a case there. And the big difference between those two is whether or not you have to pay the tax first. Okay, so this is a brief overview of what the court system looks like, federal court system, in terms of tax cases. So if it's a small claim, you go to U.S. tax court, there's no appeal. They will give the final say. So whatever they say is the law in your situation there. If you have a larger claim, then of course you will have the option to appeal if there's some appealable issue that you find in the ruling of that court. So the U.S. tax court and the U.S. district courts, if you appeal out of either of those courts, you will go to one of the circuit courts of appeals. If you appeal out of the U.S. Court of Federal Claims, there's a specific Court of Appeals for the Federal Circuit, and that's where your case will go. At that point, if after that case goes through the appellate court and there's still an issue that you feel was errantly decided as a matter of law, then you can appeal it to the U.S. Supreme Court. Important to note, however, that just because you file an appeal does not mean that it will be heard by the next level up. So starting at the U.S. Tax Court or the District Court or the Federal Claims Court, you can't just say, well, I'm going to appeal it all the way to the Supreme Court. Well, yeah, I mean, you have the option of appealing, but the higher level courts don't have to hear your appeal. If what often happens is they will have basically interns working for them that will screen through these cases, and they have various criteria, the different justices, on what types of cases they would like to hear, and they will vote on whether to hear those. That's at the Supreme Court level. So very few cases get to that point, obviously. And we're not going to get, like I said, we're not going to get into huge detail about the appellate and judicial systems. As a tax practitioner, the biggest thing that you want to pay attention to is this lower level here. And basically, as a CPA only or as an enrolled agent, which is the certification I was talking about in class that you can get to just be certified in tax. As either of those things, you can go and argue for your client at the U.S. Tax Court. To go to any of these other courts, you have to be an attorney. Okay, so as an accountant only, your only option is the tax court. And basically, if you get into something that you think is going to be extended litigation, it's beneficial, or more beneficial probably from a cost-benefit standpoint, to go out and hire an attorney who specializes in litigation. This is a map of where the various courts of appeals apply to. Doesn't really matter for our purposes that much, just more informational than anything. Okay, tax law sources, and this gets into some legal concepts that we need to understand. So, primary authorities basically means whatever they say is law. Okay, so primary authorities would be statutory sources, which means there is some congressional statute that has officially been written that covers this idea. That's the Internal Revenue Code. Okay. Then we have judicial sources, which are the courts, which is the common law system. Okay. So through the courts will interpret the statutory sources. So we have all these rules in the Internal Revenue Code, but actually applying those rules to different situations is where the courts come in. And so if you want some guidance as to how the Internal Revenue Code relates to your situation, you would go in and look at the courts and see if they have decided any cases where the court is looking at facts similar to your situation and applying Internal Revenue Code to those facts. Okay, and then we get into this concept also of, does this court have jurisdiction over you? Basically, if it's a court that you could end up in if you followed your claim all the way up through the chain of appeals, then that decision of that court is what we call binding precedent on you. What that means is, if it's a court that you could go up through the chain of appeals and eventually sit in front of, anything they say is authoritative for you. If it's going back to this map of the United States, so for instance, we're over here So we're in the 4th district here. So if the 9th district over here hears a case and they rule a certain way, and it's the exact same facts as a case that we have that we're talking about, just because they have decided that case out here doesn't mean that the 4th District Court of Appeals would decide it the same way. So we could have a case that's exactly the same out here in the 9th District, same facts, identical case, but it could come out differently here because we're in a different Court of Appeals. Now, if the 4th Circuit Court of Appeals has already decided a similar case, it's binding on us, okay? It's law for us. So we don't even need to argue it because any courts within that 4th district would automatically look at that and say, look, the court above us has already decided this is the law, and we don't need to hear that because if we rule differently, the other person's just going to appeal it to the circuit court, and they're not going to go back on what their original decision was. Now, most of the time, what happens to get a case to the Supreme Court is like the 4th District will decide one way on the same facts, the 9th District one way, maybe the 10th District a third way, and there's all this division between the circuit courts. And since they can't bind each other, they have the authority to decide differently on the same facts. And so that's kind of bad policy if within the same country, the same set of facts could be decided differently. And so oftentimes the purpose of the Supreme Court is to settle any differences between these circuit courts. And so a lot of the stuff that ends up in the Supreme Court is to pound out those differences. So that's a brief overview of how the court system works and how the judicial sources of authority work. Administrative sources, things that the IRS pronounces, carry the weight of primary authority as well. That is because the IRS, as an executive branch of government, is operating under borrowed authority from Congress to basically legislate. Now, our founding fathers probably would not like that concept very much because it kind of violates the separation of powers that we have within the Constitution. But since the Congress has delegated some of their authority to the IRS, citing the IRS's subject matter expertise as the reason that that's necessary, they do have some lawmaking authority there. But these are official IRS pronouncements. Okay. Then we have secondary authorities. These could be articles written by academics, so professors like myself who either teach tax or teach tax law or something like that. If they're doing research on a certain matter, a court could look at articles they've written and say, well, you know, I like the logic that this article has, and I agree with that. And so I will cite that even though it's not binding authority, it's persuasive. It helps me to understand and make a decision, and it makes sense. So just because it's written in an article doesn't mean it's true. It doesn't mean that it has to be accepted. But these are some sources that you as a tax professional could look at and say, well, I made my decision to advise a client this way based on either this tax service or this tax article from a reputable source, and going back to the fact that if there was, you know, legitimate precedent to your decision, then you're not going to be subject to having to pay penalties on back taxes and such if it comes out in the end that you should have paid earlier. Again, these are just another different way of looking at the primary authorities. This is how they're cited, and this is just an explanation of what that cite means. Secondary authorities, same thing. These are some of the higher ranked journals, and obviously the more prestige, the higher, I should say, the more highly thought of the journal or the source of these secondary authorities, the more convincing they are to both the courts and to practitioners who are using that as a basis for a position that they may have. So you can quiz yourself there. The answers are given. Okay, so I'm sure some of you have heard, and we talked about this a little bit in class, but there are always kind of some wackos out there that believe that the U.S. federal government does not have authority to tax. However, the 16th Amendment provides Congress the authority to tax income directly from whatever source derived without apportionment across the states. So, moral of the story there, pay your taxes, okay? Yeah, just a description there also of what tax treaties are. This is a breakdown of what the citations look like within the Internal Revenue Code. So it's broken down into subtitles, chapters, subchapters, parts, sections, subsections, paragraphs, clauses, etc. Okay? So, this right here means Section 63, subsection C, paragraph 2, subparagraph A, clause I. Okay? You wouldn't say all that stuff. You'd just say, when you were citing this, 63C2A1 or 2AI. Okay? When you go and take the CPA exam, there will be questions that basically they'll give you a little fact scenario and they'll say, okay, here on the computer is the Internal Revenue Code. Go find the section, subsection, subparagraph, and clause that deals with this fact scenario. So then, you know, and obviously these go from down here, this lowercase I being very specific, all the way up to subtitle A means income taxes. Chapter 1, income taxes. So that's very broad subject, okay? So you would start in the broad subject, and really, even if you don't understand how to do these, if you can usually just fumble your way through the answers to these, because you start with the broad subject, and you would say, okay, what I'm looking for is an income tax. And then you would see what your subchapters were. And you say, well, this is asking me to determine what the tax liability is, so I'm going to click on that. And then it would you would open that up, and it would give you various parts. You would say, okay, what am I trying to figure out here? Am I trying to define what gross income is? Okay, yes. So I want to look here in part 1 under section 61. And you would just keep looking more specifically and more specifically until you got down to the most specific thing that dealt with whatever question you were asked. So to me, when I was taking the CPA exam, these were just gimme questions. These were super easy. Don't get flustered by these. You should be able to look them up. Fairly simple as long as you understand, you know, most vague to most specific as you go. Usually have a little video that I play with this. I may play it in class next week. A little animation of how a bill works. You really don't need to know all that much about this unless you're going into like tax policy, or as a practitioner, you may have your eye on some of the stuff that's coming through legislation. Generally, as practitioners, there are easier ways to come by this stuff. There are bulletins you may subscribe to, where you'll get an email whenever something's coming through the pipeline, some big tax change, whatever. Most of the stuff that's likely to pass, if you have your ear to the ground, you usually hear about this stuff through either your professional dealings or your own research. But you could follow these through, starting with the House Ways and Means Committee, and follow them all the way through the flow chart until either it gets passed or it dies. Okay. We talked about this a little bit already, the various judicial sources of authority. This is pronounced stare decisis, and that's what I was talking about when I said any court that you could land in as part of your appeals process, if they've already decided on it, any court beneath them that feeds into them for appeals is bound by whatever they say. Okay, so that just means if there's a court above you that you would have to eventually appeal into, and they have decided this issue already, you don't get to change what they've written, because that's just a waste of time, because you know if you change it and it gets appealed up to them, they're just going to change it back to what they said to begin with. The U.S. Treasury, like I said, has been given, and the IRS through this delegation of power, been given delegated authority to basically legislate, and that's where these administrative sources of rules come from. The IRS, or the IRC, Internal Revenue Code, actually makes up I think between 1,000 and 2,000 pages of the tax code, and then the Treasury regulations, which are administrative sources of law, as you see here, make up probably another 20,000 pages, and then you have all of the various court cases. So there's actually way more Treasury regulations and information within the Treasury regulations than there are within the Internal Revenue Code. The reason for that is because the regulations explain more or go into more depth and more detail than the Internal Revenue Code. These are the various different forms of regulations. We'll touch on all of that a little bit. This is more appropriate for like a tax research class, but we're just kind of giving you an overview of what these sources are. So tax research in general is just legal research, because tax is kind of a form of law. And actually, I did a master's program in taxation, and for me it was my 4th year of law school. It's called an LLM degree, but you could have just had an undergraduate in business and come and done the same degree as, instead of an LLM, a Master's of Science in Taxation. The reason behind that is because accountants and attorneys will often overlap in what they do with respect to tax, and tax research is one of those areas. So tax research is conducted in the way that you would conduct legal research. First step, understand the facts. Second step, identify the issues. Third step, find relevant authorities. Fourth step, analyze tax authorities, which basically means look at the facts and issues that you've already uncovered and apply whatever laws or primary and secondary authorities you've found to the facts of this case and see what the results are. Yeah, I mean, I'm not going to get into too much of the differences between annotated and topical tax services. If you end up going into tax, even as just a practitioner, you will have to do tax research, because the more money you make, the more experience you have as a tax professional, the more likely it is that you're going to get into areas that are more gray areas. And these are areas where you'll have to research based on the best of your understanding of what's out there and make an educated professional decision based on what is available and probably has not been decided yet. So obviously what I talked about with respect to, like the Third Circuit versus the Ninth Circuit, making different decisions, those are what would be considered conflicting views. One court in one jurisdiction has one view on the matter, same facts, different jurisdiction, different result. Okay, those are what are considered conflicting views. So if you find that when you're researching, then you would want to pay special attention to what the weight or the hierarchy of those authorities are. Okay, so the general rule is the higher the appeals level, the more authority it has, which is why the Supreme Court, which is the last line of appellate authority, is the ultimate authority when it comes to deciding these legal questions. Once it gets to the Supreme Court, there's no further place you can go to argue your case. So whatever the Supreme Court decides is pushed out as the general law on those facts in that situation for everyone in the United States. So obviously, if the Supreme Court has decided it, that's the end of the story. If you're in, for instance, the Fourth Circuit, and your appellate circuit has not decided the matter, and you look out at other appellate circuits, and one has gone one way and one the other way, then you have conflicting views. You don't have any binding authority or stare decisis within your appellate line, so nothing that specifically binds you. Then you would want to look at, how close is this jurisdiction to yours? What are the age of the authorities? So, maybe this one case was decided 30 years ago, and this other case in another district was decided last year. Then you would probably, weigh more heavily towards the more recent decision. But these are all decisions that you would have to make as a professional. Now, the important thing to remember here is most of the time, there's not going to be a specific answer to your question. You're going to look at these laws, and your facts will probably not fit identically into the facts of whatever case you're looking at. So you will have to analyze, based on all of the available information, how likely it is that your position is right. This is why oftentimes if you go see an attorney and also an accountant, if they're doing research for you, they will tell you how sure do you want to be, or they will ask you that. Okay, because if you're paying someone by the hour, they could spend 50 hours or 1 hour researching the same topic. They may come to the same conclusion based on 1 hour or 50 hours. But if they've done 50 hours of research on it, they are more sure that that's the right answer. So when you're paying someone by the hour or someone's paying you by the hour, it's important for them or you or both of you to realize that information is expensive, and you can basically keep analyzing almost infinitely whatever scenario you want, but at some point it makes sense that you're going to want to draw the line and say, okay, that's sure enough. I don't need to spend another $10 million being more sure than that. This is the way that you would lay out a legal memo, and in this case specifically a tax memo. So if you ever go to law school, I hope you don't, but if you do, this is basically every exam I ever took in law school, and in law school you're only graded on your final exams. There's no other grade. So you start with the facts. From those facts, you figure out what the issues are. In law school, you hear the term IRAC: issues, rule of law, analysis, conclusion. Okay. For this tax memo, they have it stated slightly differently. I think more often than not, you're going to see it in the IRAC format where you start with the issues, and those are derived from the facts. So depending on who's receiving the memo, if they already have the facts, if they don't already have the facts, you would start with the facts, obviously. Pluck the issues out of that. Cite whatever authorities you're going to look at. So you would say, okay, the code section, the Internal Revenue Code section is this. I also looked at Treasury regulations. Then I looked at these various court cases that had similar facts. They said this. These were the facts of their cases. Then, and I would probably reverse this, but analysis and conclusion. For the analysis, you're basically going to look at all the issues you raised based on the facts and take those and use the rules and the authorities here that you looked at and apply those to the issues in your specific case and say, okay, this fact is an issue in this case, and it is similar to this fact that was happening in this court case that I looked at, and that's why based on this analysis, I think my conclusion is going to be XYZ. Okay, this is not hard and fast. There are slight variations to this. Like I said, sometimes you're going to see the analysis first. More often than not, I would say you're going to see the analysis first. You may have like a basic conclusion and then the analysis and then your final conclusion. But this is the basic setup. And you're always going to have facts and issues first, rules of law, which is the authorities, and then conclusion and analysis last. Again, client letter layout, this should be fairly self-explanatory, similar to the format of the legal memo. This limitations here that we're talking about is us saying basically, okay, you wanted me to analyze this for 10 hours worth of analysis. This is what I was able to get through. These are the limitations, like maybe there was no case that was binding and on point. So this is you telling your client, hey, this is what I think, but there are these other factors to consider when you decide what you want to do. Ultimately, your client is the one who decides what they want to do with their tax situation. Your job is to tell them what the law is and tell them how you think the tax court or whatever court it would get appealed to, or maybe just the IRS, how you think they would rule based on your facts. Okay, so that's the purpose of that letter. There's various rules and codes of conduct that tax professionals are responsible for. You can find them here. I can summarize basically professional responsibility is similar across pretty much all professions. There's a certain standard of competence. Passing the CPA or the bar exam or whatever indicates a certain level of competence, and then you're kind of held to the standard of a reasonable professional in your field, and then obviously to act ethically. And that basically boils down every professional code of conduct from every different professional organization. And if you get sued, that's kind of what they're going to look at. They're going to look at what a reasonable accountant or attorney in your position would have known or should have known, and they're going to make decisions based on that. Failure to comply with these statutes specifically can result in being admonished, which basically just means being yelled at in a letter or whatever. So basically nothing there for admonished. Warned, essentially, is what that means. Suspended, so you could be kept from practicing for a while, or barred from practicing altogether. Obviously, spending so much time and energy on a career, this would be fairly catastrophic. Then as far as taxpayers and tax preparers and practitioners go, in terms of legal responsibilities, the government could fine you based on your actions as a taxpayer or tax practitioner, and depending on how egregious your actions were, even put you in jail. Now, I will say, basically, the only time you have to worry about criminal penalties is if you were either fraudulent, so you're directly lying on purpose and they can prove that, or your negligence was so bad that you basically said, I do not give a damn what it says about any of these laws. I'm not even going to look at them. I'm just going to put down whatever I want. I'm not lying because I didn't even bother checking on what any of the basic laws were. If it's so egregious that that they can prove that it was basically willful negligence where you just purposely did not even research at all, that could also be result in a criminal penalty. For the most part, you don't have to worry about that unless you are purposely doing wrong. If you make a mistake, you're most likely dealing with civil penalties at the worst. So, it is accounting in general and taxes specifically can be fairly stressful. But no, at the end of the day, unless you purposely did something wrong, the worst thing that could generally happen is you'll have to pay some money. So it could be worse. Again, if you underpaid, but there was a reasonable basis for your position, and it was disclosed what that basis was, then you likely won't even have to pay a penalty. You would just, if there was a dispute and it was decided against you and your client, you would end up just having to pay what you owed to begin with, assuming that there was some reasonable basis for you to make the position that you did. So you weren't being negligent, you followed authority, there wasn't any direct authority, so you followed some other authority that made sense, and in the end, you ended up being wrong, but no harm, no foul, just pay what you initially owed, and everything is forgiven. Okay? That's it for this chapter. If you have any questions, let me know. Again, once I get everyone's quizzes back on Chapter 1, I'll try to post up some explanation of those answers.